This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
8 oil companies operating in Iraqi Kurdistan, representing over 90% of production, reached agreements in principle with Iraq's federal and Kurdish regional government to resume oil exports, an industry umbrella group said on Wednesday. The agreement would mark a breakthrough in the deadlock and allow around 230,000 barrels of crude a day to flow through the Iraq-Turkey pipeline, which has been suspended since March 2023. This framework, once signed and implemented, should allow exports to restart in the coming days, while providing a path toward longer-term arrangements, the Association of the Petroleum Industry of Kurdistan said in a statement.
Oil prices edged down on Thursday, retreating from the previous session's 7-week high, as some investors took profits after U.S. stocks closed lower and in anticipation of slower winter demand as well as the return of Kurdish supplies. Brent futures were down 24 cents, or 0.35%, at $69.07 a barrel by 10:10 GMT. U.S. West Texas Intermediate futures lost 31 cents, or 0.48%, to $64.68. Both benchmarks gained 2.5% on Wednesday to reach their highest since August 1, driven by a surprise drop in U.S. weekly crude inventories and concerns that Ukraine's attacks on Russia's energy infrastructure could disrupt supplies.
Moving on to the top news in the energy sector.
The U.S. Department of Energy intends to cancel more than $13 billion in funds that the Biden administration had pledged to subsidize wind, solar, batteries and electric vehicles, it said on Wednesday. It was not immediately clear which funds were being targeted. The department did not immediately respond to a request for more details. By returning these funds to the American taxpayer, the Trump administration is affirming its commitment to advancing more affordable, reliable and secure American energy and being more responsible stewards of taxpayer dollars, the department said.
Slovakia on Wednesday pushed back on pressure it is facing to cut back its purchases of Russian energy, saying it was ready to discuss the issue, but singled out some European states for increasing their gas purchases from Moscow. Populist-led Slovakia and Hungary, both EU members, have sought to maintain political ties with Russia, which supplies the majority of their oil needs, and have argued that it would be too costly to wean themselves off Russian supplies after building their infrastructure around it. But they have over the last couple of weeks come under further pressure after U.S. President Donald Trump said he wanted to see the bloc completely end its Russian energy purchases. Next, we have the top news in metal markets. Group of 7, G7, members and the European Union are considering price floors to promote rare earth production, as well as taxes on some Chinese exports to insensitivize investment, 4 sources with knowledge of the discussions told Reuters. Rare earths are difficult to extract metallic elements critical to the manufacture of products including cell phones, cars and high-tech weapons. China, the world's leading producer of rare earths, surprised buyers in April when it introduced export controls on the materials and unrelated magnets, in retaliation for tariffs imposed by the United States.
Prices of Dalian iron ore futures edged higher on Thursday, supported by pre-holiday restocking activity. The most traded January iron ore contract on China's Dalian commodity exchange was 0.37% higher at 806 yuan and 50 fen, $113.19, a metric ton, as of 0255 GMT. The benchmark September iron ore on the Singapore exchange was 0.14% lower at $105.55 a ton. The market is closely watching the fallout from a contract dispute between China and leading miner BHP after state trading agency China Mineral Resources Group advised steel mills to halt purchases of BHP's Jinbulbar blend fines, a key iron ore product commonly used in Chinese sintering operations, said analysts from ANZ.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures climbed for a second straight session on Thursday, supported by stronger soil prices, robust exports and the delay of the European Union's anti-deforestation law for another year. The benchmark palm oil contract for December delivery on the Bursa Malaysia Derivatives Exchange gained 61 ringgit, or 1.39%, to 4,440 ringgit, $1,055.13, a metric ton at the close. Crude palm oil futures traded higher on stronger soil prices and export performance, said David Ng, a proprietary trader at Kuala Lumpur-based trading firm Iceberg XSDN BHD.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.